Welcome to December Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592. The website at allamericangold.com. And, man, do we have another rally going on in gold and silver. Crude oil's rallying. The Dow is down. But yesterday, Jay Powell was talking at a conference. Everybody got all excited, but it's just like Jason and I have been telling you, the bottoms are in, and get ready. New all-time record highs are coming right now. Gold's up 53, $17.99. Silver's up $1. Only $1, $22.53. The Dow is down 330 points, but don't worry, because the Dow was up like 700 points late yesterday, Jason, because Jay Powell said, hey, look for 50 basis points in December.
Yeah, I think that's where it's going, Joe, for sure. And we've been watching it. And gold moving today is showing you that people are moving their money into something more safe.
And again, a lot of developments. We're going to get to it in the next segment. I've been talking, especially the last few weeks, about the ETFs, about the paper gold and silver. The only form of gold and silver that has been down this year, right? When we think about it, investment demand through the roof, central bank demand, all-time records, right? Jewelry demand up year over year. Everything but the paper markets. Not only is that changing, but a big development. We'll share it with you in the next segment. I think it's going to tell you all you need to know about where the price of gold and silver are going to be headed. Yesterday we had jobs numbers from ADP. They were light. Today we had jobless claims, 225,000. So again, no big number there, right? We still haven't seen. Everybody's waiting. When is the job shoe going to drop? Tomorrow we'll get a government number. I'm going to tell you right now, if that number is low, look for gold and silver to be higher again tomorrow. But again, day to day, I don't even worry. Longer term, things are moving very, very quickly. Digital currency talk everywhere. The ECB, remember, Christine Lagarde coming out, she's the head of the ECB saying, yeah, Bitcoin, it's worthless. It's worthless. And the need for all of these countries to have their own digital currencies. Well, this morning, the BRIC nations are not done. They're calling it the Euro-Asian Economic Union. What they're saying now, the Global South, challenging the Western monetary system, a new common payment system, Jason, designed to bypass the U.S. dollar. And I think, here we go.
Yeah, digital currencies, that's the future we're going to see, and they're testing it out. The world governments are putting them in place. So the question's always been when's it going to actually be in place, and how is it going to be instituted? What's the process, Joe? And it's I think every part of the process you're going to see weird things going on in the markets, trying to react to this brave new world of digital currency, Joe.
Yeah, and we know about Brazil, Russia, India, China, South Africa, right? That's your BRICS. But it's even bigger than this. Vietnam now, the latest to say, hey, yeah, we got our hand up. All the stands, Kazakhstan, Armenia, Belarus, they're already in. Iran, they want in. There's a lot of talk now that the UAE and Saudi Arabia are looking to join. But, Jason, not only are they going after the dollar, they're going after Visa and MasterCard as well, saying that the system will have a single payment card in direct competition with Visa and MasterCard merging the already existing cards in Russia, China, India, Brazil, and others. Big announcements happening.
Yeah, it's interesting when you see these other countries and what they're doing, Joe, and we know that they're there's a situation between Russia and Ukraine and the West and China and obviously this is all going to factor into in my mind how they're going to make sure everybody across the world uses this form of money, which is obviously less freedoms and less liberties for the average citizen of the world.
Yeah, and I'm just thinking this is really probably what this war, this Russian-Ukraine war, really was all about here, trying to stop the ball from being in motion. Then the latest numbers out of the world as far as how big these countries are, they're now saying that India is going to be the third largest consumer country in the world, third largest GDP in the world, Jason, and they say that is going to happen in the next 5 to 7 years. India will pass Germany, India will pass Japan, and then, of course, China during that same time period, right? A lot of people anticipate China passing the United States. So potentially we'll have the largest economy and the third largest economies joining forces. 800-951-0592, Patriot Radio News Hour, Joe and Jason. Gold here, $1,800 this morning. A new, fresh high since the lows of 1620 when we called the bottom here. This is a new intraday high. Look for prices to continually to go higher as, again, now we've started the path. Right, Jay Powell all but reaffirmed yesterday, look for 50 basis points in December. That's down from 75 basis points, and we're going to take this stair step down. Every one of these steps down, you're going to see bigger spikes in gold, and the worse the news get, if the jobs start falling off, we are going to see a big move, probably bigger than what even I am thinking, because a press release was issued this morning by the largest exchange-traded gold fund, the SPDR. That's the Spider Gold Fund. That's your paper gold. GLD is the ticker symbol. They had net outflows this year. Okay, so for those of you that don't understand the paper gold market, for every 10 ounces of gold you buy on paper, they're supposed to put an ounce of gold into a vault, into storage. Right now, HSBC Bank is the custodian for this gold. This year, and obviously as we've had this big dollar rally, it kind of made sense if you were a paper guy and you only just wanted to look at it through a very narrow lens. Okay, higher dollar, I should lighten up on my gold positions. Well, not only is the gold bottom in, but the top of the dollar is in as well. And the dollar is going to keep falling from here. And Jason, the net outflows for the year were only 67 tons. And I say only. Think about central banks last quarter bought 400 metric tons. And just this morning, why do I have the feeling that 67 metric tons got a big dent put into it this morning? But the fund right now, right? Well, not this exact moment, but as of yesterday, had just over 908 metric tons of gold. But then they made a very interesting announcement this morning. They said that starting December 6th, J.P. Morgan Chase will be added as a second custodian and hold its gold in vaults in London, New York, and Zurich. The addition of J.P. Morgan will allow for the ETF, according to their fund manager, Jason, they're out of room at HSBC. They're saying, hey, and I don't know exactly how much room they have, but obviously they're like, we're not going to have enough room. We need to get a second custodian because we need more space.
This is just for the physical space for the gold to be stored?
Correct.
That just seems illogical. But I guess if they have small little safes, because we all know that the amount of above ground gold doesn't take up a whole lot of space. All those movies you see with the vaults, overflowing with gold is just a fantasy. But I know they have those big vaults with a lot of gold in them. I guess maybe their vaults are just too small. But I find that interesting. Seems to me like maybe an excuse to have to move the gold around, maybe.
Well, I'm going to say this, at least in their press release, they have made it clear that despite the lackluster demand this year, they anticipate the need to have more storage in the future. And Jason, I see this very clearly. Obviously, look at today's really interesting things happening. The Dow now down almost 400 points, but the bond market, I am blown away. So right now, the Fed is officially saying that their Fed's funds rate is 3.83%. So they're somewhere between 3.75 and 4. The 10-year note is yielding 3.59%. The 1-year note is yielding 4.7%. The 2-year note yielding 4.35%. Jason, I don't understand how even this math works, but now the 10-year note, the bond market is saying the next 6 months is going to be so bad that it's now not even within, it's well below what the official Fed funds rate is, and the problem is in 2 weeks, the Fed funds rate is going to go between 4.25% and 4.5%, according to Jay Powell.
Yeah, and it'll go up again in February too, right, Joe?
Yeah, and by February, I think the number will be 4.75 to 5%. This is really indicative of what we're seeing in the markets. We had Elon Musk late yesterday, the Amazon CEO, and I forget his name because it's no longer Bezos, but the Amazon CEO at Amazon said, hey, we had the best Cyber Monday ever. He said, listen, the consumer, things aren't as good as they appear, essentially saying they only bought the really hot deals, Jason.
Okay, only the really hot deals, I guess, right, Joe? That's
only
interesting, right?
Well, that just tells you what. Hey, I'm not buying all the odds and ends here. Well, what's the great sale? Okay, that's what I can afford. It's almost like the consumer saying, "Hey, listen, it's got to be really good because I don't have a lot of extra money." Where before, you know what? Let's face it, when they knew the government was going to send them a check, why not? They'd splurge on anything.
The really hot deals never really seem like really hot deals, do they, Joe? It just seems like the businesses that are selling you the goods are having trouble selling it, so they lower the price. That's what you do, right?
You
just lower the price so more people buy.
That's right. That's kind of what they're really. We bought way too many of these. We're going to have to sell it for a lot less. In
really hot
one
deal.
other note too, inside the job store. So like I said, 225. That's kind of, now last week it did kind of shoot up, but we had the Thanksgiving holiday kind of screws up the numbers, but that's kind of where it's been. 220, 222, 223, 225. Challenger Gray and Christmas. Now they track these layoff notices, as I've educated all of you. If you're a big employer, most states require you by law to notify them when you're going to lay off more than 50 people. They said that job cuts exploded, jumping listen to this number, 416% year over year, and up 127% month over month. Total job cuts announced a little over 76,000. And just to give perspective, right? That's just getting back to more normal levels from what we would expect here. But Jason, a 400+% increase in layoff announcements, probably a sign things are getting tougher. And this normally would be one of those signs where the Fed would be, hey, we're gonna maybe lower rates or at least talk about stopping rate hikes. We normally don't see the Fed hiking. Well, Challenger Gray and Christmas is saying, hey, layoff announcements are up 400%.
Yeah, well, I think that's what we're going to see, Joe. I think you're right. So it's where it's headed, and I just can't wait to get out of 2022 because I think a lot of what we're looking at happening is going to start happening early next year and moving on. So I guess I'm kind of anxious just to get this one in the books and get into the 2023.
You know, I kind of feel the same way, and I'm watching these gold and silver markets. And these rallies that we're seeing, get ready. This is going to be very common in 2023. $50 and $100 moves in gold, I think, are going to be very common. $+ moves in silver, and really, I think we're fortunate right now that we haven't had a $2, $3, $4 move in silver, which I think we could absolutely see. And by the way, for you silver guys out there, over 22 now, the next target's 23, and silver did exactly what it should have done. So there was, these programs, because the computers do a lot of trading. 2275 was one of these little stop areas. Silver rallied right to that number, had a little bit of sell-off, now rallying right back to that number. We break 23. I think it's going to run right to 23.75, right? And then we got to battle 24, then 25. Gold here, remember, 1792. I told you that number weeks ago. We're clear of that number. 1800 really isn't more than just a psychological thing. But in gold, we're still looking. I'm still telling you, 1840. We break 1840. Jason, get ready for 1900. And I actually think 2023, we will see all-time record highs in gold.
I think you're right, actually, and it's not going to take very much to go to record highs on gold. I mean, we've been down a couple $100 from the spot record gold, but we've really been kind of floating around. As far as the way I envision it, Joe, the way I've looked at it is that it's just been floating around the highs. It's been going sideways in 2022, well, with the inflation and with what the Fed's doing with the rate hikes, but the rate hikes will stop at some point, and I think it will stop. I don't know about taking the rates back down. I think we may have these upper rate levels for a while, and I think once it stops rate going up, Joe, and you've been saying this too, that's when I think gold and silver just starts climbing the ladder. I don't know if we're going to have a blast off in gold at this point. I think it'll just kind of climb the ladder like it's kind of been doing here recently. And then when it's like, oh, now we're going to lower the rates and start printing money, and that's going to happen at some point. They're going to try to use that again. That whatever that is, even if they try it and it messes everything up, they're going to do it again. Gold will just take off. That's when it'll go fast. So that's one of the reasons I'm kind of anxious about getting into 2023 is because I know gold's going to hit record highs, like you said, but I think 3,000 gold and 4,000 gold will be within the next couple of years.
Yeah, 800-951-0592. $20 gold. Gold's up $54. $2,095. That was the price from yesterday. We made a sweet little buy yesterday. We anticipated very well yesterday as Jay Powell was getting ready to speak. We're going to see price. My guess is tomorrow, assuming gold doesn't go up. Again, this jobs number tomorrow, if it's on the low end, we could see another move, another leg here. But we'll probably see about 2130 to 2150. But I got $20 gold. Listen, this is a huge deal. $2,095 at 800-951-0592. And then on silver, because I'm not, hey, you silver guys, I got your back as well. We've got our dimes, quarters, and half dollars all on sale this morning. And yep, $1 plus move in silver. And I've got our dimes, quarters, and half dollars at a lower price than they were yesterday. Rolls of dimes at 120, rolls of quarters at 240, rolls of half dollars at 265. Take advantage of it. This is a one-day super sale. It's Christmas time. December is here. We're getting into the spirit. Patriot Radio News Hour. We'll be right back. 800-951-0592. December is here, and you know what? We're getting into the holiday spirit. By the way, all of these items are also available online right now. So we've got all of our utility silver, heavily discounted. Dimes, quarters, and half dollars. The dimes at 120, the quarters at 240, the half dollars 265. And Jason, I want to say we ran that special over Thanksgiving when silver was like $20 and change. So we've had like a $2 move since then. And we've got the price here. Take advantage of it. And then $20 gold. There you go. Gold up 55, 1801, 1802. This is where we were priced yesterday, and we got gold up $55. Take advantage of it. Keep adding to your portfolio. What's going to happen tomorrow? That's a great question. Bank of America, their head economist for the United States, Michael Jaquint, in an interview this week, says Bank of America has told its clients that they expect the fourth quarter job pace to be cut in half. So this would be, thinking about that, they're saying that the next two numbers should be under 200,000. But then they went a step further and said that they actually believe that starting in the first quarter of next year, the United States will be losing 175,000 jobs, 175,000 jobs a month starting in the first quarter of next year, Jason. So at least according to Bank of America, they're saying, hey, listen, the job cuts that Joe's been saying, where are they? They're coming. They're essentially saying, get ready starting in January.
Yeah, Joe, there's been a lot of companies that you've been talking about with job cuts, especially the tech section of the job market. But it's been kind of been bubbling up, and I it is the holidays. Let's face it. This is nobody wants to be the Scrooge that fires someone before Christmas, but it does seem to happen a lot in January, doesn't it, Joe? It seems like a lot of people just get taken out as soon as the new year starts because, hey, we got a whole year we got to plan out, and then you look at the books. This is the money coming in. This is the money going out. It's time to slash the money going out. We can't afford this, and so yeah, I don't. It could be worse than those numbers, Joe, very easily.
Well, and again, I think it just really highlights where we're thinking and why I'm like, hey, get in today. This is something where if Bank of America is right and we get a number, I think any number below 200,000 jobs tomorrow would be considered a bad number. Maybe even anything below 250 may be considered a bad number. And then in December, we already know a lot of these employers said, yeah, we're not really hiring for the holiday. We already have enough. Or, hey, we normally hire 150,000 workers. We're only going to hire 50,000, right? Or we normally hire 50,000. We're only going to hire 10,000. And now, all of a sudden, when the holiday season is over, to Jason's point, I think a lot of companies out there are going to be like, okay, you know what? Time to cut costs. And we could see some real big declines early. That will actually heighten the price of gold and silver, because that'll put pressure on the Fed to stop raising rates in March. You know, I'm already saying my anticipation is they're going to go at least till May. And listen, I may be overly optimistic. They may try to sneak one more in that late June, early July period, Jason.
I guess we'll see what the CPI is at next week, or is it 2 weeks? You know, there's probably a little tension with that number coming out, and we'll see if it's in the 7s, or if it goes back to the 8s, or if it's lower. Because if it's lower, then definitely they can stop raising the rates as fast, and they can consider stopping sooner. But you're right. You got to start seeing those job losses to completely shut it off. And what if the job losses don't really come in the way that they want them, Joe? Because like I said, the numbers are rigged in a way to make the job market look better.
CPI, by the way, December 13th. So that will come out on the 13th. And I want to say that the Fed raises rates. I want to say, I could be, don't quote me on this, either the 14th or the 15th, whatever that Wednesday is, we'll get that next rate hike. But it is a very interesting path here. If we see, and I don't know that we will, but if we start seeing, if B of A's right, in November and December, all of a sudden, you know, because we're used to seeing 300, 400, 500,000 jobs. They're saying, hey, cut this in half. And, of course, now lately, right, it's been what? High 2s, low 3s. But B of A is now saying, hey, cut that number in half. Well, okay, now all of a sudden, are we, you know, between 100 and 150,000? That's a big change. And then if we get into January and February, and all of a sudden B of A saying, hey, we're losing 175,000 jobs a month, Jason, we could see some very strong moves. I think Wall Street will probably come apart at that time. And then, of course, we'll see the big rally in the gold and silver markets. And remember what was reported yesterday. Hey, these bank balance sheets that the Fed has been boasting about, they're not as good as they actually appear to be, Jason.
Right, Joe. So we'll keep watching. 2023 will be interesting. Obviously, we'll be a little further down the road for these things that they have to make decisions for the Fed. So I just wonder if the job loss numbers they need. I wonder how stubborn it's going to be, Joe. It just seems to me that they almost have to come up with a new indicator because I think the job losses are there, Joe. I think it's coming on fast and furious, but I think their numbers have always been to make it look better.
A lot of, whether it's Musk or a lot of these CEOs are, and I'm just using my eyeballs, right? I keep saying, I don't see it yet. I'm not seeing it yet. I mean, I know I've rattled off, companies announcing layoffs and all that stuff, but I haven't seen it in earnest yet. But I think yet is the key word, because I do hear a lot of my small business owner friends are kind of wringing their hands a little bit, saying, man, I hope it hangs in there. Right now, hey, business is down, but it's still good. It's not what it was, but it's still good, and it'll be interesting to see, because here's the problem with this economy. It's going to be suddenly, and I think that's what's going to catch everybody off guard. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. That's all you need to do. Just tell the girls I want the special. Let's say which one, because today we got a bunch. Which one? You just tell them what you want. Hey, I want 5 rolls of each of the dimes, quarters, and halves. I want 20/20s, whatever it may be. They're going to get you taken care of. I know it can be a little confusing today, so we've got a couple of things happening. Right now, gold's up $56 at 1802. If you go to our website, allamericangold.com, you'll say, hey, gold's 1802, but it says it's only up $33. And all that has to do is there's an electronic trade period that occurs. So yesterday when Jay Powell was talking, gold was trading electronically. Obviously it traded up, but the difference between the 56 and the 33, that's how much it moved in the electronic trade yesterday. But then if you're watching TV, you'll be like, well, my TV's telling me gold's up 56, but it says that the gold price is $1,816. Well, which one is it? Well, here's what's happened. December is the end of the contract for gold and silver. They both have a December contract. Well, now the most heavily traded contract for gold is now the February contract. The February contract's at $1,816 right now. That's what the TV's showing, because that's what all the paper traders are buying on. Silver, it's a March contract. So in silver, like right now, I'm going to say, hey, silver's up $1.03 at $22.58. Well, Kitco's only got it up 39 cents, but it's still the same price. But on the TV, it's saying, hey, gold's up $1.03, but it's $22.80. That's the next silver contract, which for silver, Jason, that's the March contract. So every time we have these end of contracts, the TV price and the price I'm giving you could vary, but I'm dealing with the price on Wall Street, the paper price on Wall Street for the current contract.
That's right, Joe. That's one of the reasons why the physical price always seems like it should be much higher than the paper price. And you know, it's interesting because the paper price is always lower than where the gold and silver should be. We had all this inflation in 2021, and of course this year, 2022, and you see all these other metals like copper and aluminum and all these other commodities like lumber going up crazy, and gold and silver just kind of sitting there, right? Silver especially. But at some point, the inflation is the inflation. Just because the CPI might be a little lower, that just means the rate of increase is lower, and that's going to be with us for a while. And paper price or not, it has to go up. So even if, as rigged as it is with the paper price show, it will go up. And I think that's what we've been seeing the last month or so with gold and silver moving upward. Even though I think the powers that be don't want it to. I mean, it's at some point it's absurd for it not to go up when the rest of the entire world is going up in price.
Yeah, and again, just to give you an idea of where the markets think, the October contract for gold is closing in on $1,900. We've almost got $100 spread, and that's a lot. Normally you see the contracts so for gold, December, the next contract, February, April, June, August, October. And normally we see a $5 or, $5 to $10 difference in these contract prices. They tend to be well within it. Today, we're seeing $15 to $20 differences, all higher in these future contracts. In silver, we're talking a whole $1 of separation in the contract there as well. So I think everybody's it's maybe the worst kept secret that we're going to have a gold and silver, a pretty strong performance in gold and silver because the dollar top is in, Jason.
Yeah, I think that's correct. I see gold and silver definitely going up in the next few months. I think it'll go up gently. I don't see a stomping, gold market going straight up right at this time. But I see this kind of stair-stepping it up, gradually and just constantly. And I think it could actually slowly go up to those record highs, Joe. Just keep on gradually going up. And I think this in a lot of ways, gold is an indicator for where things are going. So I believe that gold and silver going up now is probably a forward message that, okay, the rate hikes are going to stop, the job losses are coming, and get ready because your 401k are going to take a pounding here soon.
Another one, and I'll say this right now: gold's right back to where it started the year. Right back to where it started the year. Just over $1,800. It's probably about the only thing not down for the year, considering where everything else has been. But I think what's going to happen, and it just kind of works this way, where you have that moment, and in this case, the moment is going to last less than a year, where the Fed pretended to fight inflation. So from essentially March till say today, right? Because Jay Powell just kind of already said, okay, we're on our descent now. That you had the paper markets pretending the dollar is strong, and now that is over with, and they're saying, man, the bond market's saying bad things. And I don't want the bond market to be right. I'm telling you right now, this is insanity what it's doing today. I mean, the financial crisis, the housing crash, man, I saw that so much better, and yet the bond market is acting like, hey, listen, we're going to have something like that or worse coming. We can see some really impressive things happening in 2023. 800-951-0592. Patriot Radio News Hour, final segment coming up. 800-951-0592. Dimes, quarters, half dollars, all on sale, all lower than where they were yesterday. Silver's up $1.03 right now. We've got dimes at $120 a roll. We've got silver quarters at $240 a roll. Silver half dollars at $265 a roll. $20 gold pieces. We got gold up $56. Same price as yesterday. $2,095 at 800-951-0592. And let me give you an idea of what we're talking about here. Remember the euro? I mean, a month ago, the euro was what, 97 cents? It's at $1.05. Well, $1.04 and change. The pound. Remember the pound? They lost control of the pound, and the pound was getting ready to, I think it got down to $1.03. It's at $1.22. The Japanese yen. Remember, Japan had to intervene. The yen was at 150 plus. It's at 135. The 10-year note just keeps getting lower. The 10-year note, it was 3.59. It's 3.57 now, Jason. I mean, the 10-year note is acting like tomorrow's going to be some kind of disaster number. I just don't see that. I think it'll be a little lower. I don't think it's going to be a disaster.
The deepest yield curve ever, right?
The deepest inversion ever. This is nuts. And again, like I said, I saw, at least the way I remember it in my mind, I saw that financial crisis coming. It was so obvious. And right now, I'm just, we've been kind of saying about housing, how big is housing prices going to fall? At first, we're like, hey, maybe not at all, but I'm kind of changing my mind, thinking, you know what, housing may turn into a disaster. And I've been saying everything I've been hinging it on is jobs. Right? I think that everything could hang in there until people get fired. Because once you get fired, Jason, you can't pay your bills.
Yeah, that changes everything when you're looking at any of the numbers. So, I mean...
Yeah, bond market, 356. This is how...
Yeah, and you know...
I mean, the bond market's saying that real soon here, hundreds of thousands of people are going to get fired every month.
There's always you always scratch your head because when the numbers say something's supposed to be happening, like the yield curve, it seems like something should have already been happening or already be deeper in the process.
But yet, the Dow's still 34,000.
Yeah. Well, they did print 29 trillion when they reported they printed 5 trillion back in 2008, 9, and 10. So I mean, that's you know what I mean, Joe. It's like there's something happening. We know for sure, but if they're giving us false numbers, which they do, yeah, you have to try to guess where are they rigging it? Where is the corrupt nature of what they're doing?
I'll admit it, I'm confused right now. I really thought, okay, as we got closer to the Fed meeting, Jay Powell said, listen, he didn't even promise, but he said, we could start slowing the pace in December. That was his word. We could start slowing it as early as December, which usually means we're going to go 50 in December, which still means, okay, that's 4.25 to 4.5. How in heaven's green earth is a 10-year note at 3.56?
Yep. Well, because
I don't know.
2 plus 2 equals 4, Joe. Unless you're not actually adding 2 plus 2. I think that's it. We don't know what they're adding together.
That's it. Maybe that's it. You know what? I don't even know what they're adding. Hey, get it and put it away. Big moves are coming.